All right, everyone. Hello and welcome. It's Matthew Pohl again at the Market Pulse podcast, bringing you the latest news and market updates. And guys, we've got a doozy to go through. If you've been watching the news at all, you know we have a lot to go over. And I'm excited to deliver not just news, definitely not fake news, but an opinion, and more so a silver lining in all of this negative news that we've seen in the market, as we probably haven't seen this volatility in years. So if you've missed out, good thing you're tuning in. But for those of you who know, I'm about to give you some incredible nuggets and some incredible opportunities that are happening in the market. And we'll kind of layer some education inside of that in terms of like what's happening also, so you can kind of understand why these plays are going to be so valuable. So let's go ahead, get through our disclosure, and we'll get started here in just a sec. All right, so kicking it off, we're going to go into our snooze, you lose section, where if you have not been paying attention, you likely have been missing out on a lot of great opportunities. And for those of you who haven't paid attention, it's like, how do I interpret all of this news? And am I missing something? Because right now the news is portraying such a negative market and really a negative consensus to the market. And consumer sentiment, I would say, is largely down because of the news, but there are some massive silver linings that are going on in the market today. And as you saw this week, we had one of the largest down days in like single history in over a decade. But we also had the largest growth day in a single day. That's right, the largest growth day in a single day since 2008, and that just happened yesterday. So I'm excited to bring you the latest news when it comes to the markets. And the buzzword that is going around right now is tariffs, tariffs, tariffs. So let's start with that.
Breaking news.
What you're about to see may disturb you.
Just recently, Trump announced a 90-day tariff pause for everyone except for those who aren't playing nice. And it's such an incredible negotiating tactic to watch what's happening in these large nations that think they have a strong arm somehow on the US, like scramble to try to be strong and leaders for their countries. And so there's been a 90-day pause for everyone but China, Mexico, and Canada, just to name the large ones. In a post on Truth Social, Trump said the reason was that more than 75 countries have called representatives in the United States to negotiate a solution to the subjects being discussed relative to trade barriers, tariffs, currency manipulation, and non-monetary tariffs, and that these countries have not, at my strong suggestion, retaliated in any way, shape, or form against the United States. So he's rewarding those who are coming to the table, and they just haven't had enough time to negotiate. Now, on the other side, China is about to go through one of the largest retaliatory tariffs from the U.S. ever imposed. And I thought it would be important to hear from Trump himself. So I want to play this quick video from the White House, Trump explaining like why he did this 90-day tariff. So here you go.
Well, I thought that people were jumping a little bit out of line. They were getting yippy, you know? They were getting a little bit yippy, a little bit afraid. Somebody had to do what we did, and I did a 90-day pause for the people that didn't retaliate. And that's what I did with China, because they did retaliate. A deal's going to be made with China. A deal's going to be made with every one of them. And there'll be fair deals. I just want fair. They will be fair deals for everybody. But they weren't fair to the United States. They were sucking us dry, and you can't do that. Yeah, I saw last night where people were getting a little queasy. I think everything had, well, the big move wasn't what I did today. The big move was what I did on Liberation Day.
So Trump, what he's highlighting is when he says people were getting queasy, he was saying those countries that were wanting to play ball and were not positioning retaliatory tariffs were getting a little uneasy that they didn't have enough time to really come to the table and negotiate. And so for those people who are playing ball, they just frankly haven't had enough time. And the US is kind of on a short timeline right now because we're trying to refinance a ton of debt and we just got done through one of the largest inflationary periods in my lifetime for sure. And we're about to experience kind of a reformation of who the US is for the world. Now, China missed the tariff deadline, and in some ways this is helping the US, to refinance its debt. And we're going to talk about that in just a second. But the silver lining is companies like Baba, which is like an Amazon-like company that ships products internationally, and any company who buys or has manufacturing outside of the US, these stocks could potentially be incredible buys right now if Trump does what I think he'll do. He'll negotiate a deal. There will be a deal eventually struck. It's not like we're going to go to actual war. Trump ended the war with Russia and Ukraine. He's not wanting to actually go to real war. And so we'll negotiate a fair deal with China. But I think the news and the reaction that is largely centralized around fear and maybe some greed in there is that we're never going to get a deal, and that the world's going to end, and that anything that's China or tagged to China is never going to come back. And so we see that in the stock market, and we see that with mostly the stocks that have a large anchor over in China in terms of manufacturing. And so I thought it'd be really helpful. It really meant a lot to me to see this data. So what I'm about to show you is all of China's exports and imports list by percentages and categories. Because then you can look at that and you can go, oh my gosh, oh, Microsoft, oh, Apple, oh, my phone, oh, these car parts. And you can start to do little dives. You can even get on like an AI and say, what are the stocks that buy XYZs from China or have major ties to China manufacturing? You can look them up. Sure enough, they've had a massive decline in the market because everyone's freaking out about us not having a resolution with China. And the theory is, guys, is if you can buy this now while it's low, it will likely go up and back to where it was. And again, this isn't like a 1 month play, guys. We're talking like be ready to hold things for a year. But you could see there's the potential of 2x, 3x, 4x gains because of how low some of these stocks have gone down if they were to reposition back to just their normal price before we had all these tariff fears and things going on. Now, let's start. So here's one of the charts I want to show you. This is kind of a visual box graph, so you can kind of see like the different categories in terms of what China exports the most. We've got electrical and electronic equipment at 27%. We have machinery, nuclear reactors, and boilers at 15%. We've got vehicles other than railways and tramways at 5.7%. We have plastics at right about 3.9%. And then here's a list to get the magnitude of how much value in the billions they're exporting out. Like China is very dependent on the US as their largest consumer and other nations. And you can see, like the first one we pointed out, electrical and electronic equipment, $896 billion in 2023. And that number has probably gone up in the last year. Machinery, nuclear reactors, and boilers, $510 billion. Vehicles other than railways, $192 billion. Plastics, just plastic, $131 billion, guys. China's going to make a deal. China has to make a deal. Trump knows that. And this administration is just going to get a more favorable deal than we're already getting. So I love to look at the data. My advice, and I've looked and have some favorites right now, but I would be looking for companies that are largely dependent on Chinese manufacturing. And you can kind of just know that there's going to be some large impact, and the trade is to buy low, sell high. And right now we're in a dip. Could it go a little lower? Yeah, there could be some more tension that the news really grabs onto and gravitates and makes us feel like the world's going to end. But at the end of the day, they're going to get a deal done. And we saw that with really Trump's expertise in deflating contention. You know, everyone's so like afraid of Trump. They think he's this big bully, while the results of what he does ends wars and ends conflicts and bloodshed. And it's like, we're not going to war with China, guys. Like, that's not in his cards. But we are going to, and are in, a tariff war. And he is one of the kings of negotiating. In fact, even has a book written on it, right? The Art of the Deal. So, critics are often saying that the Trump tariffs aren't going to work. You're seeing a lot on the news that this is like, he's so dumb, he's such an idiot. Well, before you jump on that train and you commit to that belief system, let me let you into some data and some news that you're probably not privy to. And most of this is buried. The news isn't catching it, but international news is. And what I'm about to show you is just a clip, and then I'll mention some other ones, that other countries are already coming to the plate. These 75 other countries that are ready to negotiate, they're already offering better deals. So in fact, just check this out. This is the EU, and this is the European Commission President, Ursula von der Leyen, and she's already offered a tit for tat on the trade war. So check this out.
We stand ready to negotiate with the United States. Indeed, we have offered 0 for 0 tariffs for industrial goods.
We're paying them to guard them militarily, and they're screwing us on trade. So that's not a good combination. So now it's really turned around.
So here we see Europe saying, we agree. We kind of know we've been screwing you. And we're just going to put out the first offer. And they did, 0 for 0, which sounds really great. But the problem with Europe is the billions of dollars in military aid that we constantly provide them, and frankly are committed to provide them to protect their borders as one of our allies. And what do we get in exchange? Worse trade deals. And it's like, we've been kind of the bank, we've got the lazy uncles all across the world that we've kind of been supplementing for years. And we're at a point in the US where we just can't afford that anymore. In fact, people are trying to make this a political issue, and it's just not. I saw just recently Kevin O'Leary, right? The guy from Shark Tank, very liberal, very Democrat, on MSNBC, on CNN, on these big networks. And he's like, guys, let Trump do his job. Like, we have no choice. This is not about Republican, Democrat. Yes, there's going to be negative impact in the US. But if we don't do this, we're talking like ultimate demise. We're talking like the end of how we know things in the US, the end of the dollar. And if we go into that world, the rest of the world does also, because we're the largest consumer in the world, guys. We literally float up most economies. And so we've got to get off this bandwagon that this is a political thing that Trump is doing. And for those who are proud of him, I get it. But let's not make it a topic of like rubbing it in the other side's face. Let's just make it about making America first again, putting your tax dollars back in your pocket rather than giving it to our lazy uncles around the world. So I want to talk a little bit about how all this comes together in terms of strategy, and why tariffs and why Trump is using them as a tool to keep America from going bankrupt. And so let me just explain some components that the news would never dare go into because of its complexity, for one. So most people would just like glaze over this information and be just complete idiots around what's going on. And two, there's some market complexity that people just frankly don't understand is going on in the background, because Trump is using the media to be kind of his fan on the fire. But what's really going on behind the scenes is what matters and is the most important and probably the most unreported. So here's the data. Let me just give you some facts. The US government needs to refinance the most amount of bonds. It's basically its debt, right? The country has debt just like you have debt on a house. And imagine, I want you to compare this to your house or your car that you have debt in, okay? And every so often you have to refinance it. Like, it never goes away. You never end up paying it off because the interest on it is so high. It's like that credit card where the interest is so high, the balance just never gets to catch up. Well, that's what's been going on with the US, except the interest has been so high and the tariff trade has been so bad for the US that our debts have actually kept climbing on this credit card. And now the rate to refinance is higher than what we sold it at because rates were so low for so long. Well, there's approximately $9 trillion, not billion, trillion dollars in debt that we have to refinance this year. Now, a lot of people go, well, how are you going to, we just print it. Well, then we go through like an insane inflationary period again. Worse, to pay that off and print that would be worse than COVID, just so everyone's clear. And so here's what's going on. This is a 5-dimensional chess game. So we've got US debt that needs to get refinanced. We've got tariffs and this trade war and rebalancing things globally, right? To like take some easement off of like the US and the pressure to like be everyone's good uncle. Well, tariffs actually historically will cause markets to drop because they are somewhat inflationary, and it also increases the cost of goods coming in, which therefore would make the cost of goods go up and things less profitable as companies try to squeeze less profit and consumers try to consume the same amount, right? But the market dropping isn't that bad of a thing if you can do it right, if you can time it right. And so the market's been dropping, causing investors to turn to other assets, right? If the S&P 500 drops 30%, what do traders normally do? And I just know this because I was trading through 2008. And I saw the migration into the bond market when we had the 2008 recession. And what you see is when there's like a market that stops dropping and we've had 3 months of negative returns, people go, oh, I don't like this anymore. I can go get a CD at my bank and still get a return. And so what people do is they start offloading. And they may not offload everything. They may keep 50% of their money in equities, 80% of money in their equities. But I would say, generally speaking, most people with any significant amount of money are pulling risk off the table when it comes to securities, and they're piling it into more long-term safe assets. And one of the largest is bonds, because bonds are tied to the U.S. economy. They're tied to the dollar. That you're guaranteed to get paid back, right? And it's at a rate that never can go negative. It just can't. A bond, you can't lose money on a bond if you buy it and sell it at the time of expiration. You just can't lose because they will literally print it if they have to. Now we're trying to avoid printing to pay off our bonds, and instead we're trying to lower the rates because this increase in demand will drop the effective rate, and just out of predictability and people like pricing what the future is going to look like, it already has. And I'm going to show you this in some charts. And right now, the effective rate is actually around 4%, where federal hasn't even gotten there yet, right? The feds haven't dropped rates at all, but the effective trade rate for bonds has actually dropped to 4%. Now, it has gone up a little, but let me tell you what, that's 4%. Let me tell you what 0.1% saves the US in dollars. 0.1% in a drop in the rate, not a 1%, 0.1% saves us $9 billion per 0.1%. So do you think there's some motivation to get the bond market rate to drop? Yeah. How do you do that? You get the market to drop. How do you do that? You use leverage with tariffs to negotiate a longer term deal that's going to be better for us anyways, and we take a hit now to get rates at a better rate, get a discount on our borrowing. You bring things back up, rates can come back up, doesn't impact us as much, and we go back to work. So let me show you this chart really quick of the US 10-year Treasury. So here is a current view, and you can see since January 2025, the rate was at 4.8%, and as you can see, dropped all the way to 4%, and then just recently had a small spike up of 0.3%, and every one of these tenths is saving us money, guys. It's just bringing it down, bringing it down, bringing it down. And so there's this 90-day pause that's happening actually might be to swing the market. And when I say market, I mean like S&P 500, the Dow, the NASDAQ, the overall securities market. It might actually be to trigger the market to come down a little bit lower so people offload money back into bonds. The U.S. gets a refinance at a great price, saves billions and billions of dollars for the U.S. citizens and taxpayers, and we get to start kind of over on our merry way. Now, check this out. I'm going to kind of break this. I'm going to nerd out for just a minute. And if you look at risk premiums, this is an interesting chart that is also, so when people offload off of securities, is the only thing they can buy that's like a safer asset like bonds? No. Or at least like treasuries? No. There's junk bonds, right? And what junk bonds are like these corporate bonds, right? These people here like, well, that must be the bond no one wants. No, it's just a categorization of like corporate bonds. And so you can see that junk bond premiums have been coming down, 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 and then 2025 have gone radically up. And so premiums for junk bonds have actually become more attractive. So unfortunately, we're probably going to see more people jumping into junk bonds, but there is a significant risk. Why are these bonds going up when the overall curve, the overall effective rate is dropping? Like, we're not seeing this chart compared to the last chart does not look the same, right? Well, I'll tell you why. Corporations and corporate debts are also getting refinanced right now. So think of them as their own little, ecosystem, just like the US. But different. They can't print money. They can't buy their way out of this problem. And they're facing kind of a pullback in consumer sentiment, which would mean people wanting to buy goods and services. And so you have kind of this problem for business where corporations are trying to refinance their debt and the rates are going up. And so the cost to refinance corporate debt is actually getting worse. And so just imagine you got a loan for 3%, and that's not a business loan, but let's say you got a loan for 6% back in the day, right? It was a 10-year, and it's coming up for renewal right now. And the rate now is 10%. That's a 4% difference. Well, your payment on that debt immediately, you did nothing different business-wise. Supply and demand and your product or service did not change. And now all of a sudden you have a bigger payment every month that you got to figure out. Well, that's happening nationwide. And not just nationwide. You can see the euro and the US, and they're actually correlating. This is happening globally right now. So I'm looking at this like, yes, people are definitely leaving securities and buying bonds. They're getting good premiums here, but corporate bonds are kind of a high risk. And other assets, by the way, that people are moving into are the traditional ones, right? It's likely why we'll see gold stay pretty stable, silver, metals, commodities, real estate. People will move into physical assets when things get a little scary. And basically any other tangible good that is physical in nature and is not some type of normal security. Some other ones that come to mind are obviously crypto assets, right? Like Bitcoin. You've got kind of this like gold standard that's happening in the cryptocurrency world, and Bitcoin's actually been relatively stable considering the volatility. Like if you're to compare volatility indexes and what Bitcoin usually does percentage-wise compared to the volatility we have now and how stable Bitcoin's actually being, is really a testament, I think, to the future of Bitcoin when this whole thing gets figured out. So there's another little nugget for you that I think we're going to see a strong Bitcoin price, a bull market for Bitcoin when things stabilize a little bit and people start to really have more cash to put back into the market, and Bitcoin really survived this test of time. Next up, I want to show you investors poured into bond funds. So you can kind of get an idea year over year, the percentage of the billions of dollars, this is measured in hundreds of billions of dollars, made by investors into the bond fund market. And you can see that 2024, this green line, was higher than 2021, 2020, 2023, and definitely 2022 when we were going through like the whole COVID mess, right? And so investors are investing more into the bond market because there's a higher demand. And as you saw, premiums are going up. So they're getting a good return, which is also a reason why the market is coming down outside of Trump, outside of being at an all-time high, tariff wars, etc. We're seeing that there's just better places to put your money right now that are less risky, while also keeping in mind that corporate defaults are coming into like an all-time high. Here's another interesting chart, just same data, a little different display. Investors have poured money into investments grade corporate bonds. So this is the corporate bond, not just bond market. And you can see in 2024, we are at a all-time high. So investors, this money just doesn't come out of nowhere. So it's likely coming out of the securities market. And it makes a lot of sense when you start to get to a market that plateaus or starts to come down, that people are going to start looking for other assets. And so people in 2024 largely put money into corporate bonds. But I just want to kind of set you up for this, like call it my prediction for 2025. I think this bar is going to be lower in 2025. And I think because people who are smart and are investing heavily in corporate bonds, they know the risk that's on the table right now. And they know there's actually a lot of people who are betting on corporate bond defaults, similar to when we had the housing market crash. Now, I'm not calling for a, this isn't like a Wall Street's bet moment. This is not a the big short, that's happening from the real estate market in the corporate bonds market. I would not say they're apples to apples, but the data is showing that corporate bonds are failing at a higher rate than we've seen in a long time, and that curve has not leveled off yet. So things are getting pretty stressful for businesses, and so it would be nice, it'd be really helpful if the Feds would bring the rates down, but with tariffs, you have inflation fighting against that, and so the Feds, they're impartial to how well business does. They're impartial, they're not government owned or controlled. A lot of people don't know that. But so they're just using their own data to stabilize the dollar. And even though it'd be really helpful to bring rates down so corporations could do this so that they could, refinance at a decent rate, it's just too inflationary. And it would affect you and I way too much, and it would hurt the dollar way too much for the Feds to do that. So my prediction is we'll probably get 2, maybe 3 rate drops at 0.25%. Anyone who's predicting more than that, I think, is insane. And a lot of it has to do with tariffs. They're kind of like going, tariffs are on the rise. This creates short-term inflation because cost of goods goes way up. But then Trump put a 90-day pause on it. That might give the Feds the permission to do a rate cut because there's no real major inflation coming outside of, China and some of these retaliatory tariffs that we have coming in. I want to just say one last thing before we get off, that there is a uncanny amount of negative press around Trump and tariffs that it's really hard to see the silver lining. And I just want to remind people, whether you like him or not, it just doesn't matter. I had a lot of coaches I didn't like. I had a lot of teachers in school that I didn't like. And at the end of the day, when I finally saw the result of what happened, I really liked who I became. I liked who I was. I liked my life because of the result, even though I really hated my coach. And so I think it's okay to have that disdain because his ideals aren't the same. He's really hard on people. He's really aggressive. But I just want to remind people that's what we need right now. The U.S. needs not really a bully is the word, but a very strong position negotiator. And you're not a great negotiator. You don't write a book called The Art of the Deal that's all about negotiating unless you're a great negotiator. And I know people on both sides of the table politically that admittedly will say, I don't like Trump. I don't like his, how his behaviorally, he's kind of a bully. But when it comes to making a deal, he's the best deal maker I know. And that comes from both sides politically. And so I just want I want to encourage people to let him do his job. And then let's see what happens from the results. Because I don't think there was a presidential candidate option that could have been put in this place to handle this different. We didn't have really great options. And I think we kind of got lucky that the timing of all this happened when it did with Trump being in president. I couldn't, out of the last 6 presidents we've had, I think Trump's the best one to deal with this problem right now. And he's going to get a lot of crap about it. And he's going to get blamed for a lot of things. And thank goodness he's not going to bend the knee for his reputation. We already know that. The guy almost got, killed multiple times. So I don't think that's going to be an issue. So the opportunity for the patient is definitely coming in the market. I would say more drops expected. I believe Trump will make good deals. I think China will come with a better deal than we have now. And some are saying, and I kind of agree with the sentiment, that President Trump may be unleashing the biggest dollar reset we've had since Bretton Woods, since 1971 with Nixon. And I know that's way before a lot of your times and a lot of my listeners' times, but look it up sometime. Look what happened with the Bretton Woods. Look what happened with how we restructured who we were globally and how the dollar accelerated. And I think this is an opportunity that we may have to do that. Now, having said that, there are some people that I highly respect. You know, I'm always looking for alternative viewpoints. I want data. I want people that are credible. And then I'll still question them. And one of the people that just came out recently was Ray Dalio. And if any of you guys know him, he was the largest hedge fund manager for years and recently retired and now does a bunch of books and seminars and is traveling the world really trying to educate people on like what happens to economies, like long term, over lifetimes, so that we can start to predict and deal with kind of a new world order and new changing world orders that have been part of this world since its inception. Like, there's been no currency that's ever lasted forever. They all have life cycles. He's identified those. And this might be a great reset for the dollar or the finishing mile, right? The last lap. And it's, guys, it's one or the other. There's no in between on this. But let me share this video from Ray Dalio as he talks about the potentiality of a recession.
I think it's likely that we're going to be in a recession. And the question really, recession is, a line at zero you get, and then, sort of 2 quarters in that. And I think right now it's close call and it's probable. But who cares about let's say 2 quarters of stagnation or a little bit of negative? I'm more worried about the greater dynamic of these conflicts. I'm worried about more serious issues.
That are structural,
the financial,
and hard to
the
fix.
political, the financial, the political, and the geopolitical, because they feed on itself if you get a bad one,
Yeah. Ray, thank you so much for your time today.
I think that this is not a normal recession kind of situation. We are changing the monetary order. In other words, when we start to think there's supply and the demand for debt, and one man's debts are another man's assets, as I said. And then the question is, money, which is debt, is supposed to be both a medium of exchange and a storehold of wealth. And there are times in history, and this is one of those times in history, that there's a question of whether bonds are an effective storehold of wealth because of this supply, demand, and so on.
So I want to set you up right with Ray Dalio. And as I listen to this, I know Ray Dalio's history really well. In fact, if you read some of his books, he does a really incredible job going through his history, kind of as a disclosure. But Ray Dalio, probably one of my top 3 heroes, by the way, financially, also historically got it wrong in a time that was just like this, in a time that was being compared to something just like this. So as I listen to Ray, I've got this filter on that's like, but remember what Ray did during 1971. And for those of you who know his story, he was early in the hedge fund world, early in the investing world. And when Bretton Woods when it was Richard Nixon, and we had this new monetary regime system that got kind of restructured. Bretton Woods happened, right? The Bretton Woods system got dropped, the gold standard disappeared, and what we saw and what Ray Dalio predicted was a recession. He was actually predicting a Great Depression, and he put all of his eggs into shorting the market. And I just want to show this to you guys, what actually happened. I thought this was interesting to see because most of you either weren't alive or don't remember this time period, right? The 70s. Like I don't. I wasn't even born in 1971. But here's a quick chart. 1971. It was August 1971 when we did away with the Bretton Woods system, and you can see what the market did. For about 3 months, it dropped, and it dropped, relatively small. It looks like maybe 10 to 20% max from its high, from the last peak to valley. And then after that, for almost a year or two, so over a year and 2 months, went straight up. And it killed Ray Dalio. In fact, he talks about his last $1,000 that he had and had to start over. And then we had some things happen later in 1973 that were completely not tied to that. But then if you were to fast forward to today, guys, everyone knows that we are way above a $105 S&P 500 stock price, right? We know that what's actually going on in the S&P 500 is close to 5,000, right? And so that's also inflationary, but also the massive growth that's happened in the S&P 500 in terms of GDP. But I'm kind of like weighing this as like, is Ray still on his game? I also noticed, and I'm a little sensitive to this, but my dad had Parkinson's. And I don't know if you guys saw that, but I've been watching Ray recently, and this video really highlighted it as one of his most recents. I'm starting to wonder, and he's made no announcement around this, but I'm starting to wonder if he actually got a diagnosis around Parkinson's or some other degenerating disease. Because his shakes remind me a lot of my dad going through that last phase. And I also wonder if that's why he stepped down and kind of went into his philanthropy phase. But it's eerily similar to 1971 in so many ways, guys. And we're seeing a restructure. This isn't just like a negotiating tariffs tit for tat. We're restructuring who we are for the world. And in a way, repositioning the dollar in a way we've never done before. And we're doing it globally. And I'm just glad it's Trump. I mean, I don't know how else to say it. I don't know who else out of the last 10 presidents who I'd want to have doing this job now than someone who is going to probably be a little overly aggressive, who's probably not going to take a shorthand deal, who's known for putting and being in the hot seat and still getting a deal done. So I know he has a lot of practice around that. I'm grateful for that. I'm grateful for like all of his business experience because I'd want someone that has done a lot of negotiating and hard deals like this. I actually probably wouldn't want a politician. So anyways, personal opinions, non-political, but definitely about people in politics. And there's going to be a lot of that today, by the way. The politics are messing with the markets a ton right now. So we're going to segue into my bulls, bears, and brain farts, where we talk about the bulls, we talk about the bears, and we talk about, if there's nothing really going on, the brain farts, right? So let's jump right in. So getting started, we've got to talk about Tesla. It's probably the number one stock I'm talking about right now. And it's also being highlighted a ton. And I'll just kind of flash you back to a time when COVID happened. When COVID happened, I created a whole portfolio that I called COVID stocks, where I listed out the top decline stocks because of COVID-related items, right? Getting together, gathering, transportation, hotels, anything that had to do with something that I knew shutdowns and lockdowns would affect. And I just knew, just common sense, that we would go back to some social norm around all this. I just knew that. And even casinos. I remember buying a publicly traded casino. And it's like, we all knew this was going to happen, but because of fear in the market, most people are afraid to buy in when this is happening. And this is the struggle of the winners and losers in the market. And so I just want to show you really quickly a chart of Tesla. So here's Tesla. There's a one-day chart. And you can see clearly back to January, even mid-December, Tesla was trading at about $486 a share. Currently, as you can see on the right, it's trading at $254 a share and hit a low of about $211 a share. Now, what is causing this? Well, as you know, and unless you've been hiding under a rock, there's a lot of political stuff going on with Tesla right now. And I would say anytime we go kind of into a recession or a time period where people are kind of a little tighter on their money or interest rates are high, the automotive industry typically takes a hit. In fact, I don't know if you guys know this, but most dealerships, most brands don't make money as a dealership. They make most of their money selling parts after. And that's actually been the dealership model for years in a lot of cases. But I want to kind of break out this moment, this insane, incredible, intense moment, and the word is Tesla. So why the drop? Like, what's going on? And before we get into this, I just want to mention, like, I'm pretty agnostic. Like, yeah, I have political preferences. I've got things I like, things I don't like politically. But when it comes to trading, like, I'm agnostic. I just want a good trade. And so I hope for those of you who are on here, you can do the same thing. In fact, I remember hearing, if you think like, oh, well, if I'm a strong Democrat or I'm a strong Republican, then therefore I shouldn't invest in blah, 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 fill in the blanks. Just take Bill Gates, for example. I remember when Bill Gates told Elon Musk that he was shorting Tesla. And Elon was just like, what are you talking about? You're pro-environment. You have all these nonprofits about saving the earth and global warming and like emissions and like green energy and blueprints and, all this stuff. And Bill Gates just answered honestly and said, well, I think you're overvalued. And so I'm shorting you. And Elon obviously retaliated with once the company goes into full, autonomous driving vehicles, anyone who's shorting is going to wish they never had. And there's, obviously there's a lot of stuff in the AI and data around self-driving cars that Tesla's been doing that no one else has been doing. And they're now testing self-driving cars in certain areas in the country also, like to completely replace Uber, to completely replace these like taxis. Taxis would be included in that. But basically are public transportation systems that we rely on, Lyft and Uber. So I want to talk to you like what caused this drop. It's pretty apparent for a lot of you, but Elon took a position at Doge, and that made him extremely political and a target to the opposition, as the Democratic Party's really been struggling with a standing on like what they stand for. In fact, I don't know how many of you guys have seen this, but the Democratic, this is an internal issue. The Democratic Party among Democrats is at the lowest approval rating that they've ever been at. It's like 36%, less than half of like Democrats are approving of like the policies that Democrats are like coming up with. And like, this is our thing. So it's not everyone who's like doing this. In fact, most people who bought Teslas were Democrats, because it was pro-environment. They're EVs, right? It's like low emissions. And so they're, whether orchestrated or part of, I've heard a lot of tinfoil hat stuff, and I'm very open to it. It's like yesterday's conspiracy theories or today's truths. But, you got these theories that George Soros is funding all these, anti-Elon campaigns and is actually funding like people vandalizing Tesla dealerships, blowing up cars, etc. But just this under the spotlight has caused Tesla stocks to drop significantly, more than most other car manufacturers. And they're calling it like a protest against Elon. But I want to provide some like reality checks around this. And one is that I do not believe that these forms of protests are politically working at all. Like if I was in charge of a political group and trying to really make a difference and like get people to be against the other party and whatever, this was a bad play. Like this was a really bad play, and I'll show you why in just a second. It's laughable. And two, I think there may be one of the best opportunities to buy Tesla stock at an extreme discount. And if you're looking for an EV car, this may be the best time to buy an EV car in a long time. And it's like there's a window. And so I love, this is not like to my opinion, this is not a silver lining. Like this is pretty obvious, guys, what's going on. And like COVID, I just can't see how he's not going to come back. There's no car manufacturer in the world that can put out EV cars like Tesla. Not even close. If you look at the charts on like what percentage of EVs come out of Tesla, there's not even a close second. Like not even like if you were to combine every other manufacturer of EVs, they don't even make up half of what Tesla is doing in terms of EV production. So they have a moat that is so deep and they're going so far so fast that no one's going to catch up to this. So having said that, remember when Elon Musk fired off that bold prediction on X. He said, once Tesla fully solves autonomy and has Optimus in volume production, anyone still holding short positions will be obliterated. And this was kind of his attack towards Bill Gates. And then last July, Musk basically dared short sellers to bet against him. He basically said, do it. So I'm not saying like there's this cocky arrogance that comes with these like, billionaires, but there is something that causes them to be billionaires, and it's this confidence and this drive and commitment to win. And I would not be betting against Tesla right now, but I also want to show some like really obvious things and some comparisons that I saw happen with other stocks that I think are akin to what's happening right now. So let's talk about the protests first. Vandalizing Tesla cars, dealerships, and their effectiveness, and why I think it's going to all end very soon. Like, it'll be birds chirping later, like crickets, right? It'll be crickets around this topic. The news will get tired of this. And, there's kind of this weird thing that when people get spotlighted for doing things like this, they feel like they're the heroes, and it creates more of it. But eventually those things go away. And I just want you to show the negative impact. That's the opposite of what I think people are trying to do. And I just saw this the other day. So check out this video. It's just mind-blowing. This is like non-common sense stuff that like it is just a clear sign to me that my opinion and idea that Tesla's a good buy right now is true. So check this out.
Check it out, guys. Somebody keyed the crap out of my Tesla, a car I bought 6 years ago in the state of California, because I'm concerned about climate change. Oh, but some amazing resistance fighter keyed the crap out of it, and that's going to do it. Voting didn't work, but this defiling the car of a fellow liberal, we did it, guys. We got him. Today's our Liberation Day. Go celebrate. Just go celebrate. Woo!
So clearly, this guy, and I'm glad he did it, but I just want you to think about this for a second. Who bought the most Teslas? Like politically, like what party? What party? It was the Democrats. It's the Liberal Party. It's effectively the people interested in climate change the most, environmental issues the most, people that were trying to, not use fossil fuels anymore. And now they're attacking Teslas. And who do you think drives them? Who do you think the majority of people that drive them are? So from a political standpoint, they've just gone to war with each other. It's like they just went radically more divided. And so where do you think environmentalists that's like actually what they're interested in, and they just attached to the Democratic Party because they were saying that's what they're interested in. Who do you think people are worried about climate change? People that are anti-fossil fuels, and that's like the platform they stand on. You don't think they're looking across the aisle right now going, well, who's really pro Tesla? Who's really pro EVs? Who's really pro environment? And far extreme left, I have a lot of Democratic friends who are not that, but that far extreme left thinks this is the platform to run on. And they're losing people by the thousands. And it's like, no wonder why. Like, this is, it's just, I don't know anyone who's seeing this and going, oh, I have a counter argument to that. No, there isn't one. It's hurting your party. So like this, if it's a political position to go do something like that, if this is a protest, you're losing your own people protesting. I mean, it's like insane. I also want to mention this. Pam Bondi came out. Check this out, what she had to say.
I've made it clear, if you take part in the wave of domestic terrorism against Tesla properties, we will find you, arrest you, and put you behind bars. Today, I'm proud to announce that the Department of Justice has unsealed federal charges against another Tesla attacker. We've charged Cooper Frederick in the firebombing of a Tesla dealership that occurred on March 7th in Loveland, Colorado. All of these cases are a serious threat to public safety. Therefore, there will be no negotiating. We are seeking 20 years in prison. The crime was committed in Colorado, and thanks to the great investigative work by the FBI, the defendant was arrested in Plano, Texas. Let this be a warning. You can run, but you cannot hide. Justice is coming.
So I have not heard that clear of a message from an attorney general of the United States for a long time. And she has made it very clear that this is not tolerable also. And so you're going to see liberal agitators that like encourage this agitation, the ones who did it and thought there weren't going to be any consequences, have consequences, and they're going to look back at the people that told them this was going to be fine. We're freeing people, liberating people, blah, blah. And now they're going, oh my gosh, there are insane consequences for this also. This all points to one thing, and that's I think this is all coming to an end soon. And I'm just going to give you a couple more examples, but I want to give you one that I thought was really interesting. Do you guys remember Bud Light? Remember Bud Light? You remember like the whole thing that happened with Bud Light where Republicans did this like crazy like cancel culture thing on Bud Light and movies and videos and like social things. And did it affect the stock? You betcha it did. In fact, check this out. Let me go to Bud Light. So here's Anheuser-Busch, which owns Bud Light. And here's the date that it happened. And here's the market sell-off from about $67 a share all the way down to $54 a share, and then a continuing wave into $52. Where currently it is down a little bit from this, but what you can see is that it had almost a entire 100% rebound after we moved on. You just can't hold politically a topic for that long, guys. Political topics die. They run out of juice, and the juice is the news, and the juice just can't keep feeding the headline after headline after headline. So in order to have like another political opponent, they're going to have to find something new, and when that happens, Tesla stock's going to rebound. I just don't see it any other way. There's also rumors, by the way, guys, that Elon Musk is going to be leaving Doge. There's been rumors and speculation that he's going to take himself out of the department but still be an advisor to the president on some level. And so it's like that alone could be the victory that the Democratic Party or liberals and protesters are looking for. Yeah, we won. We got him out. And then it's like all's forgiven. Because if they don't, they're basically saying we're anti-environmentalist, we're anti-electric, we're pro-fossil, we're pro-carbon emissions, we're pro like awful footprints, right? Like they're basically saying the opposite of a lot of positions that, frankly, a lot of people in the party, like that was the foot they stood on all by itself. And so this has to change. And if the Democratic Party's like gonna get their act together and get their own constituents to start liking them again, this nonsense politics is gonna have to end. And I really believe that this downside in Tesla is just nonsense politics. And if you're hearing me and you're a Democrat, I apologize. I don't mean to be offensive. That is not my intention. I just want to deliver the truth. Yeah, there are some undertones for me but like, guys, I traded Bud Light and I didn't trade it. I wasn't shorting. Like, I was buying the lows, right? And it's like, that's what I'm talking about. You have to be, as a trader, unattached to politics. And all you're doing is you're looking for opportunity. If you're going to be a trader and you are going to be a politically correct trader, heaven help you, because you will get yourself into really bad trades. You're going to get that bias is going to put you into a position where it's going to be hard to make money at times in the market. And to survive this, you have to be immune to that. You have to be unwavered politically when it comes to trading. And that's what I'm hoping to deliver to you, even with my own political persuasions, is the truth about what I think is going to happen to Tesla and why it's happening. Another fun thing that I thought I would just throw in there, and I kind of skipped this one with Tesla, is I saw a video recently also where people are protesting Tesla. And again, all of these things are contributing to why the stock is dropping, right? And one of them was a lady who kind of had this wake-up moment. She was clearly a Democrat, and she sold her car because of Elon Musk. But then she did this video that went viral that was like, I just sold my car, and I realized that the person who bought my car is still going to be driving it on the road. And it's like, guys, this movement against Elon, what is it actually doing? And I just want you to think of the insanity behind this. Like, it's backfiring hardcore. Every one of those cars gets sold to someone else. Who do you think's buying them? Who do you think is buying Democrats' cars? Republicans. Who's probably going to fall in love with these cars now? Republicans. Who's going to be the platform now for EV? Republicans. And even if not, they're going to get more on board with it because of this movement. Now you've got, hopefully Democrats that still love EVs, still love the environment. And you're going to have more Republicans that are going to be the same way because they're buying these cars on a discount and they feel like Elon kind of, changed sides or whatever you want to say. And they're seeing him more as a hero and they want to support him, blah, blah, blah. And that's fine. But the hypocrisy, it's like, if you're really going to protest, burn your car or like put it in a car crusher, because if you're going to sell it, you're not really doing anything. In fact, what you're probably doing has more negative impact towards the thing you're trying to protest. Oh, good times, guys. All right, so I want to talk to you guys about the top 6 AI stocks, and there's a reason for this. I believe, and I have invested in AI heavily, and I believe, and in some ways really poorly, like hundreds of thousands of dollars lost in AI. And that's just part of trading. That's part of investing. It's what happens. But AI is kind of going through a recalibration. And some people are blaming Trump, the presidency, for all these dropouts in AI companies. But a lot of it had nothing to do with that. A lot of it had to do with the recalibration of the value of AI. And up to this point, we have not seen the value in terms of like return on AI compared to the investment on any of them. We've had no moonshots in terms of cash revenue on AI giving us the return compared to the amount of investment that's gone in, period. And so I thought it'd be interesting to show you the top AI, like the most heavily invested to AI stocks. And I put them in order. So you have on the left Microsoft, obviously OpenAI, ChatGPT, you've probably heard of them. You've got NVIDIA, they're the ones that provide the chips. You got Amazon, they're doing the servers. You got Google, they've got Grok, or excuse me, not Grok, they've got Bard. And then you got Meta, and they've got their own AI also, right? So these were the most heavily invested into, and I just want you to like take a step back and look and be like, cool, what value have they brought me? Well, like these conversational AIs are huge, but in terms of like it making money, other than its subscriptions, they're not making much compared to the billions of dollars that were being poured in. And then along comes China. And China does this thing called DeepSeek. And as DeepSeek engineers detailed in a research paper published just after Christmas, if you guys remember hearing about this, they basically said we did the same thing at a significantly reduced cost. You guys have been putting billions of dollars into this thing, and they're saying, this is from their engineers, they only needed about $6 million in raw computing power to create DeepSeek. Roughly a tenth of what Meta spent in building their latest AI. A tenth. And so now we really get to recalibrate, one, the waste in computation power to like build these AI systems. Two, what value we're getting out of them, and seeing China as a global competitor in the AI space, especially when it comes to cost. And if any of you guys have been on DeepSeek, which if you haven't, I'd recommend it just to compare, but it's good. Like, it's not 4.0 good like OpenAI, ChatGPT 4.0, but it's like 3.5 good, if you know what I'm talking about. It's pretty good. And to see the cost difference and also the chip restrictions. I don't know if a lot of you guys know this, but China is banned from getting certain NVIDIA chips. Like, they actually do not have the computational bandwidth and power that the US has, and it has actually been limited in buying certain chips and cards to be running their AI processing on. And so in a way, they were handicapped, used that as an opportunity, and built an AI system that's pretty darn good for about $6 million in raw computing power. Now, I know what you're going to say, for those of you who looked into this and been in this conversation. Well, Matt, they're lying. And we know China's known to lie. And I get some of that. I've heard the arguments both ways. And regardless, maybe it wasn't a tenth of the cost, but either way you skin the cat, they still did it with a massive computing power disadvantage. And even from some of the skeptics that I've heard, it was still significantly cheaper than anyone's done it in the US with a handicap. So we've kind of debunked that we need these crazy NVIDIA chips and video cards to do all the processing, excuse me. We now are open that we can be running these on a lower grade card, right? So rather than these huge high-end cards at about half, we can get cards that will do this at about half the rate and still get the same outcome in return. And so it's really having companies reposition and like, oh, do we really need the latest and greatest to be creating value from AI? And ultimately we're coming to the answer of no. And as AI has developed over the last couple of years, the return on the capital investment just hasn't been there. So looking for creative ways to lower costs and build these AI systems, China shook us up, and we're still dealing with the repercussions of that. Guys, if you go back to this chart, it's pretty bad. Like Microsoft, 455 to a low of 345. That's $200 off the table. NVIDIA, 152 to 87. Amazon, about 250 to 165. I mean, guys, this is like cutting half. That's like cutting the baby in half on all of these. And most of this is AI related. Just no return. We haven't seen the return on that investment. Now, I think globally, we're going to get that payoff. But so far, companies are not being able to capitalize in terms of that return on revenue. All right. I got to throw a fun one in there. I've got this really cool What the Nerds Are Up To segment.
Rock, Paper, Scissors, Lizard, Spock was created by internet pioneer Sam Cass as an improvement on the classic game Rock, Paper, Scissors. All hail Sam Cass. Hail.
I had to do this. I'm an outdoors guy. I've ridden dirt bikes and ATVs my whole life. Got really into them in even my older years. Used to race dirt bikes. And when I saw Kawasaki's latest announcement, this is more than, if you're like, oh, I'm not into ATVs. This is way bigger than that. This is a technological advancement and kind of a wave and look into the future that I was like, we've got to see this. This is like something people are going to be wanting to look into. These are hydrogen-powered robot horses. Like, this is like a sci-fi movie happening in real life, guys. So I got to play this video for you.
In a surprising turn of events, Kawasaki, widely known for its iconic green motorcycles, has taken a bold step beyond two wheels. The Japanese manufacturer recently introduced a new concept vehicle called Corleo, a machine designed not only to traverse all terrains, but also to redefine the very idea of mobility. The unveiling took place at the Kansai International Exhibition in Osaka, drawing immediate attention from both tech enthusiasts and the general public. Corleo is no ordinary vehicle. It's a four-legged robotic machine, closely resembling creatures from fantasy films. The user rides it like a horse, but its movement is far more dynamic and lifelike. Observers at the exhibition noted that it moved with the agility of a panther or a dog, a clear indication that Kawasaki aims to merge robotic engineering with natural motion in a way that's never been done before. According to Kawasaki, Corleo is designed to conquer all types of terrain, making it a versatile option for future mobility. It is even being described as a replacement for horses, with the ability to leap and adapt to rugged landscapes. This signals a significant departure from traditional off-road vehicles, suggesting a potential shift in how we view transportation in difficult environments. What powers this mechanical beast is even more intriguing. Corleo runs on a hydrogen fuel cell, reinforcing Japan's growing trust in hydrogen as a clean and sustainable energy source. Kawasaki, along with other major Japanese companies, continues to explore the hydrogen frontier, aligning with the country's broader vision of a low-emission future. Japanese industrial leaders see Corleo not just as a futuristic toy or conceptual experiment, but as a realistic vision of mobility in...
What I like about this, what I'll say about this, and then we'll wrap things up, is the days of fossil fuel engines, I think, are coming to an end. We finally have gone to a point that the players who own fossil fuels, the players that own the engine, and, you know, I'm going to get a little tinfoil hat on you guys, that hydrogen motors, these alternative energy source motors have been largely suppressed by big oil and big oil companies. And as we're starting to get into an energy struggle when it comes to fossil fuels, it's starting to open the door a little bit more into these alternative sources, which are frankly way more environmentally safe. And I don't know if you guys know what the byproduct of hydrogen is when it comes out of a motor, but it's water. And so I couldn't think of a better replacement for fossil fuels when it comes to this. But I also think this is freaking cool. Like, what you saw was definitely not real. The thing running around, that was definitely either AI generated or, you know, some type of digital depiction. But as I read through this and did some research, the people that said they saw the demo said it acted like a cougar, like it acted like a cat almost. And it had like this ability to position itself and move around and jump in a way that was very cat-like. And so obviously they're going to dial this in. I can imagine the safety concerns and like testing that you'd have to do to get something out. But they're saying, you know, this is possible within the next 15 to 20 years. And I know that's a large leap from today, but as we look at the advancements in the AI and engineering, I could see that time frame shrinking up into possibly 5 to 7 years to have some tech like this. We already have those little small robots that we're using in the military and for like, you know, all different kinds of uses. Doing things like this. In fact, there was one that came out not too long ago. A guy was like riding on it. It was like running around a dirt bike track. But to have one that's self-controlled and that consumers can own and ride, you know, obviously there's safety concerns. We've seen this with like self-driving cars, even though it's probably generally safer than how most people drive. Just one accident's enough to set everyone off. And so obviously they're going to be very careful in the release on this, but I just love this stuff. I love sharing this with you guys. So I just want to thank you guys really quickly for being on with me, taking the time to invest in yourself, to get to understand the markets a little bit better. Hopefully I was able to kind of dissect and like help you digest some of this information. But this is an exciting week, right? And like there were some real nuggets that came out of this. So I hope you guys are able to take advantage of that. Obviously, big disclaimer, and I put it at the beginning and the end. But like none of this is trade advice. Like do your own work. Do your own research, trade at your own discretion. You understand your own risk. And I'm not responsible for it at the end of the day. I'm just doing this for educational purposes. I want to help out. And if something I did brought value to that and helped you make a better decision going into the future, that's really what I'm here to do. So thanks for being with me here, guys. And we will be getting to you here shortly in the next batch of major news updates in the market. Thanks so much, and we'll see you guys soon.